Welcome to Artelligence, the podcast of art news, art in America, and Art Market Monitor. I'm Marion Maneker, and we're going to explore the mysteries of the global art world. Ed Dolman has been the CEO of Phillips Auction House since 2014. He will become the executive chairman in September of 2021. Prior to that, Ed spent 27 years at Christie's Auction House, the final 11 as its CEO. He has also served as the head of Qatar's Museums Authority. It's safe to say that Ed has a unique perspective on the fine art auction industry. Ed, it's nice to see you again, at least virtually.
It's great to be with you again.
So you are one of the three big auction houses, and you made it through lockdown in a slightly different manner than the two larger houses. And by that, I mean both Sotheby's and Christie's were able to survive and cope and run interesting hybrid sales. And you did some of the same. But you also seem to grow in this period in a way that, in part because of their size and the occluded market, your competitors were not able to grow. And so I'd be very curious to hear sort of what the lockdown was like for you and how it sort of came to pass that you were able to gain at least, if not market share, which I think you probably did, at least, bigger lots and more consequential lots across a wider range of styles.
Yeah, I mean, it's very difficult to be positive in any way about the impact of the pandemic. And so, I can't for a second sort of diminish the impact that it's had on so many people. But as you say, for us at Phillips, it was in a way an extraordinary vindication of a number of the things that we had already been putting into place over the last few years, which, the sort of the advantages that we had of focusing on 6 specific areas of 20th and 21st century art. So we really do sort of focusing on, I think, the growing art collecting categories and the categories that are collected specifically sort of globally now. We focused on those, and we had introduced what we call the Digital First initiative some years ago. So by the time the pandemic struck, people were already able to watch auctions on their mobile phones at Phillips and actually bid directly into the rooms via their apps. And so I think these two things, really set us up pretty well as, the world came to a halt last March and people started interacting in a different way. And I think the younger art collectors who Phillips and our brand tends to resonate more with than anybody else, found the transition into that sort of digital space and the ability to buy and transact online sort of much easier than in other collecting categories. And I think that in a nutshell, I think was the reason why at the end of the year we were surprised, frankly, at how well things had gone.
You in the past have had a number of very big lots, but they were more on occasion or part of a specific collection. But certainly in the last group of sales, you've had a greater number of sort of low 8-figure to mid 8-figure lots. I'm thinking of the David Hockney, Clifford Still, some Joan Mitchell paintings. You've certainly been able to set records in your auctions for artists like Ruth Asawa or even Amy Sherald. So you've sort of been able to move up to higher price points in the representation side. Sorry about that. Are you able to access those lots better now because of performance, because of relationships, because of change in the marketplace?
All of the above, I would say. I mean, I think fundamentally, we are still, even in this virtual digital world, in a relationship business. And we have at Philips a really great group of specialist business getters who have been in the business for a long time. The Cheyenne Westphals, the Robert Manleys, the Jean-Paul Engellands, the Olivia Thorntons, the Jonathan Crockett's in Hong Kong, and you know, they maintain relationships at the highest level with the same great collectors that our competitors do. So, you know, Philips is in the conversation with these collectors when it comes to them to decide to sell something special. And then quite often, these big consignments go down, or these big ticket lots go down to the financial deal and how your guarantee stacks up and how you can arrange the financing behind the deal. And we are as adroit at that as anybody else. And so I think, you know, nothing is stopping us from competing flat out at that area of the market. And obviously the December sale, as it turned out, in New York last year was a real triumph for us. And as you say, the Hockney was a spectacular result. But what I think is more interesting in a way to me is the exponential growth we've seen at the lower end of the market. Our day sales and our new now sales have grown enormously. And it's a very good, fast-moving growth area for us. And frankly, the revenues and the commissions are better at that end of the market. And we actually, in a way to sort of supercharge this growing interest that we see at the other end of the contemporary art market, we introduced a Gallery One last year, which is a sort of rolling online sale of contemporary art that changes effectively with a new drop every week. So, you know, no, I mean, I'm very pleased with that performance last year.
I have to say, Ed, I'm very impressed that you've got with the lingo of the NFT world with the drop and all. See, you know, you're staying right ahead of that curve with where it's all going. But I mean, I'm kidding a little bit, but it is very interesting that, you know, Philips's strength has always been creating markets for young artists, responding to demand from collectors to access work that hasn't necessarily been sold at auction before. And I think we've also seen a kind of interesting shift. Again, in that December sale, you had a large number of, you know, African diaspora artists, African American artists, African artists, young artists, and historical artists, all making significant numbers in your day sale, somewhat out of the view of the, you know, the publicity, but significantly, you know, where everyone's watching in this market, seeing that happening. Is that a shift for you in terms of who the specialists are, or is it just being good at being on the ground and knowing what the collectors want and being able to access the right lots for them?
I think it's really part of Philips' DNA and who we are. I mean, we tend to employ people who are really interested in, you know, what's happening in the market and what's likely to be happening next in the market. I mean, that's what drives so many of the people that work in our contemporary art department. And we've always had our finger on the pulse, I think, in terms of seeing what's going on and how taste is changing and what our sort of, what collectors are looking for next. And so I think Philips has had a tradition of being very good at spotting where the market's going. And you know, we are pretty good, I think, at selecting the right artists at the right moment to seize the new taste changes that are going on. So I think it's been part of our DNA. It was, you know, I started working for Philips almost 7 years ago now, but it was something that had been established by my predecessors and Simone de Pury and others, and really it is what Philips is all about, that what's happening now and what might be happening next in the contemporary art market. Philips has been there and is known for that. And I think in a way that's what makes our brand and our proposition resonate so well in Asia, because I think in particular that's what new collectors in that part of the world are looking for.
Well, I'm glad you mentioned Asia, because it seems that the Asian market is driving a great deal of the taste right now, and in a surprising way. I mean, it started and people were fixated on artists like KAWS gaining prominence through Asia, but many of those African diaspora artists are collected by buyers in Hong Kong and Singapore. That the interest in Eddie Martinez, certainly the Matthew Wong interest, is both American and Asian. And you guys did a deal or developed a relationship with Poly Auction, I believe the largest Chinese auction house, just last year, and you're continuing through. And it certainly felt like in that first auction in Hong Kong that there was a lot of bidding coming through Beijing, through Poly, and that you were tapping into a large, surprisingly unaccessed market. I would have thought, you were already quite good at reaching the collectors in mainland China, but the Poly relationship certainly seemed to move it up a level. Could you tell us a little bit about how that started, and then what effect you think it's having on your sales?
Yeah, I mean, I think it started because I think, everyone in our business realizes that in a way, the first access to this huge growing mainland Chinese collector market, is the way to success. And, we've been looking at ways of unlocking that potential, for many years. And, I think, we have looked at what we could be doing at Poly for some time. We got to know them, and in the end, we got to know them well enough to collaborate in this way, which I think is incredibly exciting. Because the secret of an auction, it's a really very simple thing. You just need as many bidders as you can possibly can. You need to find as many people that you can engage in the process of bidding at auction as you can. Simple as that. And for us to effectively, through Poly, discover a completely new pool of bidders who really wanted to actively engage with us in the contemporary art market was really exciting. And you're right, Marin, the striking thing about the sale that we had with them, the first one we had at the end of last year, was just the depth of the bidding and some of the prices we got. And, we made an extraordinary price for a Nara, the second highest price ever at auction. And that was driven by a mainland Chinese buyer competing against, a traditional buyer of Philips. And that was exactly the dynamic that we wanted to create in that collaboration. So I'm fantastically excited about the potential of this, especially for our June sale coming up, actually, where for the first time we'll see a room full of bidders in Beijing and a room full of bidders in Hong Kong, and then live streamed around the world, competing for the works of art we have in our sale. It's a really important moment, I think.
And do you think that's being helped by the hybrid auctions, that, this change we've had where it seems, and you forgive me, I'm always skeptical of the numbers. They're gotten enormous, and I know some of them are like through Facebook and all that. But even if you discount those enormous numbers, they're still extraordinary for what we normally think of as an auction audience. We've been webcasting auctions for 15 years now, maybe 10. I can't remember, and I would have guessed the audiences were in the 5 to 10,000, and those people would have been ecstatic about numbers like that. Now we're hearing, hundreds of thousands, if not millions of live streams, which suggests that there's both a large audience for participating, but also just the spectacle of it, getting information from the auctions themselves, watching them and seeing who the specialists are as proxies for the bidders, and just sort of engaging in the market in a way that you can't really accept in a live room. But I assume too that one of the features of Poly bringing those buyers is that they have, it's a high touch business, and you've got people at Poly who've got clients, and they've been speaking to their clients and talking to them about the lots that they're interested in, giving them a sense of what might happen with the bidding and really engaging them so that when the lot comes up, they're there on the telephone to bid and maybe get those extra 2 or 3 bids that they might not have if they didn't have someone working with them and all. So how as an auction house do you manage those layers of engagement? As you just described, if you're going to have a room full of people in Beijing, a room in Hong Kong, people in New York, bidders in London and all, in your one of your sales, you had a internet bidder from Samoa. So, it is a far-flung group of buyers. How do you manage that internally, on the phones, in the auction room to get the best result for your clients?
Well, I mean, I think the live streaming of the auctions has, the concept of the live streaming, because you're absolutely right. I mean, live streaming, the sales had been live streamed for some time before, but necessity is the mother of all invention. And I think when the pandemic struck and we really sort of ramped up the auction experience with effectively TV studio production, and then had to start marketing these events in a different way, which implied much greater levels of accessibility for lots of people. That certainly started sort of triggering in the minds of lots of people, well, why don't I tune in and see what's going on there? I too am a little bit skeptical about some of the numbers I read about sort of millions of people tuning in. And I actually do think, as a slight tangent, we're going to continue to see the live streamed auction event honed as we go through, because, frankly, sales that last 4 or 5 hours aren't exactly must-see viewing for lots of people. So I think there's a little bit of fine-tuning that we need to do there, because the sales are almost by nature slower. The bidding is slower.
I don't mean to interrupt you, but I wanted to ask you something about that, because I do think, as we've watched these evolve, I've felt the exact same thing. We can't live through 5 hours of selling. And I had expected sales to move towards a more frequent calendar. You were talking about drops, maybe, monthly sales of a smaller size that could be done in an hour with, a mix of lots, less categorized and more about, the reaching the audience. But after December, it felt like all 3 auction houses were somewhat exhausted from the experience. Admittedly, a lot of improvisation, a lot of unknown, going from being shut down to in late June suddenly scrambling to put on as many sales to generate, for your clients and for your business as much revenue as possible. And so then there was a pause, and instead of there being more frequent sales organized for 2021, we seem to have gone back to the traditional sales calendar, or at least provisionally. You guys are doing this June sale in part to highlight your new headquarters, I'm assuming, but you're slightly off the calendar in the sense that New York will be in June rather than New York in May. But it is a more traditional calendar where I would have thought we would have moved towards something new and shorter. Was there any thinking behind that, or is that just sort of the way it all landed?
No, I think we will see the sales calendar fragment over the next few years. I think it's one of the big learnings from the last 12 months, actually. How little the timing of sales really cares to our clients really care about that. It doesn't inhibit their bidding in any way. The sales events in New York and London and then subsequently Hong Kong tended to be driven by slightly absurd local sort of traditions about when, bank holidays or public holidays occurred, and when sort of the season happened to be in New York or London, which frankly is increasingly irrelevant with so many clients participating in the sales from all over the world, who frankly wouldn't know when Memorial Day was in the United States. And so, that sort of rather old-fashioned way of looking at the calendar has gone, and it was proved absolutely during the pandemic that as sales became dislocated by, the logistical problems and all the other problems that we had, and we started running sales not in atypical times of years without any problems at all. I can't see the traditional sales calendar lasting in the form that you've seen it over the last, 40, 50 years. I think it's gone back a little bit because the high value sales in particular are limited by, your ability to gather material for that sale. And it does tend to take a little bit longer to put together a group of works that would look and feel like a typical evening sale. You can't just throw those together. They don't come to market very often. They aren't that big in number. So, as these things are pulled together for one auction, it tends to demand a certain amount of time to put it together, a certain time to market, and so you get these sort of fewer events. I'm not sure when the market picks up again. I think we will quickly see all sorts of different sales appearing in the calendar. I mean, there's so much happened last year that sort of completely sort of detonated people's traditional view of how sort of high-end fine art auctions run. The sales calendar is certainly one of those things that's going to change.
But there's also the swing back to the traditional. You're opening a new space effectively right next door or on top of or underneath your old space that's been planned for quite some time. I presume was sort of planned with a different era in mind. It is a large, I don't know what it's going to be built out like, but a large space beneath the office buildings and residential tower just behind you, and with that cube on the corner of Park Avenue. Is that going to just be a showcase, or is that also going to be a auction room?
No, it's definitely going to be an auction room. We're all hoping that as we return to something more like normality, people will return into the auction rooms and will sit during the auctions and bid in the traditional way. I think that's an important dynamic, and people love doing it and seeing it, and there's no reason why we shouldn't be doing that going forward. I mean, the sale will be enhanced though with all the sort of learnings of the last year in terms of production and the capabilities of people to bid over the web from all parts of the world. That will be there, but we'll also see live auctions taking place. And I do think it's very important for us to maintain really sort of the highest quality exhibition spaces we can, because no matter how sophisticated the world becomes in terms of allowing people to view works of art remotely over the web and over their PCs and via their mobile phones. There's frankly no substitute for standing in front of a masterpiece and just getting a sense of what it actually is. And you need exhibition spaces to do that. I mean, our exhibition space in 432 is going to be fabulous. It's got very high ceilings, sort of column free. It's like a big box. Purpose-built for viewing substantial pieces of contemporary art. And it's smaller in scale, though. I mean, it is not, perhaps 15, 20 years ago, you might have been looking at 100,000 square feet or 150,000 square feet of space. That's not the case here. It's 35,000 square feet, which is a a relatively modest but incredibly high quality exhibition space, which I think is much more in line with where the market is today.
Does that include you have built a building in London? You now have this new space in New York. You have a space in Hong Kong. Is there a sense of where you view the center any longer? I mean, a few years ago, we would have said New York is definitely the center of the business. You're a British company, but you do a lot of business in New York. Your competitors are sort of half. One's an American company that does business in London, and one's a British company that does business in New York. And Hong Kong was always an important part of the mix, but something that was perspective. Hong Kong now seems to be bordering on the sales that we might use as the bellwethers. There's certainly more excitement coming out of those sales and more unexpected things happening in them. Is it still this sort of balance between the three? Is it a sense of kind of the migration from the old centers to eventually the new center?
I think that's it. I mean, I think you're looking at a migration, as you say. I think it's a redistribution of buyers and sellers, frankly. And, you could look back in very broad and general terms, say that the sellers in the first half of the 20th century were the Europeans and the buyers were the Americans. That continued until this century. And now I think we're seeing, a new massive buying community in Asia, with Europe and the United States increasingly becoming sellers into that market. So, if you had to ask me to forecast where the business and where the future of the art market was, I think Asia is going to probably become the dominant buying area. But the dominant consigning areas will remain Europe and increasingly the United States. And so our business has got to reflect that. We have to build very strong, good relationships with people who currently have wonderful collections that might think about selling in the future. And our business in Asia is very much focused on buyers and getting those buyers access to the best works of art that happen to be sitting in Europe and the United States at the moment. But it's a hugely exciting moment. And the pandemic, interestingly enough, sort of continued and almost supercharged this shift, because we saw at Philips our transactions with Asian clients grew by 30% year on year, 2019 to 2020. 5 of the top 10 lots we sold went to Asia. And I think this is just part of a continuing trend, which is why our link up with Poly is so incredibly important, because Philips effectively is going to be tuned in to, I hope, the biggest buying community as we go forward, which will give huge opportunities for sellers in Europe and the United States to really maximize the value of the art they hold by selling through us to this new client base in Asia.
Does it matter, do you think, or I'm sort of curious to hear how you think it through, because we've seen more artists who you would not necessarily have expected to have large client bases in Asia, auction houses take their work and sell them in Hong Kong. And some of it is for living artists, some of it is for, blue chip artists, as we like to say, or 20th century artists. And it has been an interesting mix over time that not necessarily the works that people thought would do well in Asia did well. So, there's been a lot of experimentation. There's been things that have, as you mentioned, Nara, there have been artists who have emerged as sort of pan-Asian market stars and a lot of demand. And we know that, maybe we don't know this, but one has the impression that Asian buyers are more transactional or more comfortably transactional than traditionally North North American or European buyers were, though there's clearly, obviously, a lot of transactional people in the art market everywhere. So is it because we're now global and doing hybrid auctions, it's easy to source in Europe and sell from Europe and know that you can get the Asian buyers because they're smart, hyper-aware, and following things? Or do you have to pick and choose things that need to be moved and sold in Hong Kong to, access that pool of buyers from Poly or from Hong Kong and Singapore and the region?
I think more and more significant works of art will be taken to Hong Kong for sale. We've already seen that actually just in the last few months, that the level of significant post-war American artists that have appeared in Hong Kong auctions now at high prices has started happening. And it wasn't that long ago. I mean, when Philips joined the fray in Hong Kong with 20th century sales about 5-6 years ago now, we were actually the first auction house to genuinely mix Western contemporary art and Asian contemporary art in the same sale, because we had sensed that, that collecting community had moved on and were no longer just collecting Chinese art. They were really looking at the opportunities that to collect Western art. Since then, what used to be the contemporary art sales in Hong Kong held by the major auctioneers, which were purely Chinese contemporary works of art, or Asian contemporary works of art sales, all that's changed. And you've seen many, many, many more works of art being sold. Warhol, de Kooning, Clifford Still, David Hockney, etc. They're all appearing now in the Hong Kong sales. So what I'm saying is that the point you made, yes, you could live stream sales and still sell de Kooning in New York, and you would probably get Asian bidding on it, absolutely. But there is still no substitute for taking these great works of art and putting them in front of this new client base and really getting them engaged by actually standing in front of the works of art. And so I think we're going to see more of that over the next few years, certainly.
And do you see any resistance or doubt on the consigners' parts? You mentioned earlier, so much of this is about the consigners. Are consigners, do they take convincing if you say, hey, we want to sell this in Hong Kong, we want to sell this Clifford Still in Hong Kong, trust us, this is where we're going to get the best price for you?
The opposite. Absolutely, 100% the opposite. People want to sell now in Hong Kong. They're coming to us to sell in that sale because of the association with Poly. The levels of resistance are zero as far as I can make out. I mean, there was a concern about payment and whether mainland Chinese buyers met their payment obligations. And there certainly were some problems, and have been problems with that. But one of the great things about our Poly collaboration is we have a mainland Chinese partner who can also deal with the sort of financial arrangements with the bidders that bid for us. And of course, if your partner is working in a jurisdiction that has authority over where the bidders are living, it does make the enforcement of buyer contracts much easier than they might otherwise be if you were sitting in New York trying to enforce collection on a sale in mainland China without any real jurisdictional power to do so. So the Poly collaboration has worked extremely well there and has added a significant extra layer of protection to people who want to sell with us in Hong Kong.
Talk a little bit about financial arrangements on the consignor side. As we know, especially with the largest collections, sort of global guarantees are an important part of how you win a consignment. We haven't seen a lot of those sales, in part, I think, caution about the environment that we're in, though certainly it seems there was plenty of demand and there might have been a missed opportunity by not bringing some of these large collections to market over this last year. But you guys had, for a period, more direct guarantees than your competitors, partially, a function of your size and your ability to land consignments. You are competing more for collections. Have you changed the way you do the financing? Is it more being able to line up the third-party guarantees? Do you have the financial power to at least make the upfront commitment, sort of the bridge guarantee before you make other third-party guarantees to secure your risk?
Yeah, I mean, I think the move towards laying off risk in the auction business started some time ago and has just gathered steam. And frankly, most auctioneers now will be pretty resistant about taking direct guarantee risk onto their own balance sheet, and will be doing all they can normally to find partners that they can lay off that risk to. And so I think, Philips has been on that journey. A few years ago, you would have seen many more house guarantees at all the auction houses than you see now. And Philips has evolved with that as well. And, there are all sorts of sort of dynamics in the market around these financial guarantees, and the third-party guarantee has been a very successful mechanism for us, effectively to manage our own balance sheet, but also manage the sales, manage the marketplace, etc. If you look at the sales over the last few years since third-party guarantees have become pretty de rigueur, it's a much more consistent sell-through rates. You get many less failures at auction. The market, I think, overall has benefited from this and has almost been stabilized by this. It might sometimes make the auctions less exciting. And yes, a lot of people will say, well, the trouble with a third-party guarantee means the lot has already been pre-sold before it comes up at auction.
Yes, but part of the goal of an auction is setting a price. I know we all want the drama of bidding and all, and the excitement as a spectator sport, as it were. But the real function of these auctions is to set prices for the consignor, obviously, but also for everyone around it. Much of the business works off of the information provided in public auctions as a way to triangulate whatever sales they're doing, and I presume that's helped with the functioning of the market, especially in this period where things were shut down and a lot was unknown. To be able to see things transact and know at a number has helped a lot of other people at least orient their sales.
No, you're absolutely right. And I sometimes think the sort of all the sort of conspiracy theorists around this third-party guarantee phenomenon, it's fun to talk about sort of whether there's sort of something behind it that you can't trust, etc. But frankly, it's been of huge service to the market for everyone, collectors, buyers, auctioneers alike. It's a much more sophisticated way of de-risking auctions for very high value assets. And when I think back in my early career, stretching all the way back to the 1980s and 1990s, which most people won't remember at all. But, when guarantees really started at that time, when I think back at them now, they're absolutely absurd. The house would take on a $15 million guarantee. The auction would be going fine until that particular work of art bombed, failed to sell, and the market almost collapsed at that instance. The rest of the sale was normally a wipeout, with very few people there wanting to bid because they think, oh my God, that was a bit of a disaster. That work of art was then effectively burnt and unsaleable for years for that family who were selling it, quite often their only asset. And the whole market was sort of significantly damaged at that point by that very high profile failure to sell a perfectly good work of art at a guaranteed amount. So, that was not a good scenario for anybody. And I think now, consigners can sell knowing that they are going to get good, competitive, guaranteed amounts of money for what they're selling. They're not going to be left with an asset that is sort of burnt after a sale. And the whole market knows that there's a very stable value for these important works of art. And yes, you'll see people competitively bidding and pushing the price up a little bit, taking the market to new valuation levels. So the whole process has been, I think, incredibly important and good for the market. And Philips has, as everybody else has, we've become, I think, very good at procuring third parties and laying off risk to the benefit of everybody.
And I assume you're still working with the same pool that your competitors are. When we're talking about third-party guarantees, I mean, obviously it's an overlapping group, but generally the same. Whereas you seem to be developing an advantage with Poly to tap a pool of bidders, that's not necessarily translated into the guarantee market, or perhaps it is. Are there new guarantors coming into the market?
I mean, I still think that by far the best arrangement is to find someone who really wants to own the work of art that they are backing. So we do work with the same group of well-known collectors who like to have the opportunity to acquire works or to take the risk on a work by an artist who they admire and collect and would very happily own at the level that the guarantee is set at. That's the sort of ideal situation. I think in a way the slightly less ideal situation is when you're dealing with funds or investment vehicles that are just looking for opportunities to take risk on and earn a little bit of money. It's not a bad thing, but it's not quite the same, I think, as laying off risk to someone who really knows the artist, knows the work, and really wants to own it.
No, that makes sense. And I think, maybe there were a group of people who came into the market a few years ago and didn't have such a great experience, in part because the market has somewhat, at least in that period from 2016 through 19, sort of plateaued. There seems to be a lot more movement in different areas of the art market these days, but sort of the overall price level is still pretty much standard, which makes it hard if you're looking to guarantee something and then flip it in a couple of years to actually get a return for the risk that you're taking on. My final question is just about the watch market. I know that, the watch business is an important part of what you guys do. And I was just curious about how this whole hybrid auction, transformation, is it only for these sort of highly visible, contemporary art lots, or will it actually affect the collectibles market, especially a high value one like the watch market?
Well, I think we were absolutely amazed at how successful our watch sales were in 2020 at a time when people couldn't visit the sale rooms in Geneva and Hong Kong and New York to view the watches. I mean, watches are it's a very sort of tactile experience, and we were worried that the sort of the virtual world would not lend itself to really high-end watch selling, but in fact it did. The watch sales grew quite significantly, amazingly, and once again, I'll have to check the statistics, but I think 40% of the watches we sold at auction by value went to Asia in 2020. And they were bought largely remotely through these live streamed auction events that we were holding. So watches, just like all our other categories, seemed unaffected by the problems of selling remotely and virtually, and surprised us all. And I think the watch market, which we're particularly strong in, I have to say, largely because we have, I think, the best expertise in the market, and that department is led by the extraordinary Aurel Bax, sold $133 million worth of auction watches at auction last year, which was a staggering amount.
So the whole hybridization could affect the whole market. It's not just the layer of the top lots. That's, I suppose, the most interesting aspect of this as we wonder where this business goes, that we haven't yet found the boundaries between, and obviously as the world opens up again, it'll change things back, I'm sure. Ed, I can't thank you enough for doing all this. It's been a pleasure. I hope to see you again in person real soon. Thanks for listening to the Artelligence Podcast. If you enjoyed this episode, please be sure to subscribe, share on social media, or leave us a rating and review. To get the latest art coverage, visit artnews.com or subscribe to our magazines, Art News and Art in America.